All right. Hello, everyone. Thanks for tuning in. So, I want to talk about why some of my students or some of the community have been what they say printing stimmies, which means making money. I mean, I'm not a young guy, but I am immature. So that kind of keeps me young. But printing stimmies is like from when the government was handing out all this money, it means like making profits. So I want to show you something here on Amazon. Now, at the stock market jobber, we are more or less technical, but the market always teaches lessons. And sometimes we look at numbers, right? Whatever. We're just looking for opportunities. We're looking for stuff that looks like it's going to move. The way I look at the market is this, all right? I always use this analogy. My students make fun of me, but it's a perfect analogy. Pretend it's the Middle Ages. It's like the year 900 and you haven't died of gonorrhea or the Black Plague or whatever, and you're a farmer and you want to bring your goods to the market, and there's like just this one market that everyone brings their goods to, and whoever brings the supply in brings it there. Whoever brings the demand in, which are the buyers, goes in there. Now let's just say that there's one road in and out of this fictional market, and someone is been hired by one of the merchants, and they're watching the wagons come in, and they say, usually there's 8 wagons of apples, but now there's only 1 wagon of apples. That means there's a good chance that the price of apples is going to go higher. There's a lack of supply. So whoever the spy was might not know anything about apples, but they understand supply and demand. And that's what we do. We're looking for things that are kind of out of equilibrium. All right. We're not looking at what's the stock going to be at in 3 years or blah, blah, blah. All right. So let's go into AMGN. So this stock blasted off. The first sign of weakness was here. All right. It opened here, got all the way up to a former resistance level around 325. All right. A lot of times there's resistance at former resistance levels because you have people who bought at the resistance level who regret doing so when the price goes lower. So if the price finally gets back to where they can get out at break even, they do so. This is why you get resistance at former peaks, because you have remorseful buyers trying to get out at break even. Why do we sell off of resistance? It's also a psychological thing. People that want to sell start to get concerned that they're going to miss out because the buyers are going to go to whoever is willing to sell the lowest price. Now, back in my institutional days, AMGN trades about 2.6 million shares a day. So let's just say I had an order of 200,000 shares, which would be, an okay order for the stocks. Not that big of a deal, 1/10 of the daily volume. Stocks at 300, I come into the market, I got to sell all the stock. Well, maybe I can only sell 10,000 there. Maybe I got to sell the next 10,000 lower. Just because something trades at a price doesn't mean that you can sell it there. So this AMGN really looks weak, and I think it's going to go lower. So I'm going to go into the earnings statement because, like I said, we don't really pay that much attention to earnings, but if something really sticks out, then we do. And these numbers really stuck out as really like ridiculously bad. So let's talk about what an adjustment is. Okay. Let's just say you have a company and they are making $10 million a year. Okay. $10 million a year. And then let's just suppose that you have a factory. Man, look at all this stuff. This is crazy. Okay. Here we go. Let's just say that you have a factory that burns down and it costs you $2 million. All right. Now, what's the real income? How much did you make if you earned 10 million, but you had to spend 10 million? I mean, sorry, 2 million to replace your factory. Well, most logical people would say, all right, I'm getting angry here. I got to find the freaking earnings statement. But most people would say, you know what? You didn't make $10 million. You made $8 million. But the thing with the adjustment is like, all right, well, this is a one-off thing. So if it didn't happen, we would have still made a $10 million. This is what we call an adjustment. And I mean, I guess it's debatable, but as a trader, I'm not here to argue. I'm here to make money. So it's like, it's like you guys make 10 million or 8 million. I think you made 8 million. Now, if I look at their report here, their earnings report, we have what we call GAAP and non-GAAP. So the GAAP, GAAP, is generally accepted accounting principles. Non-GAAP is not generally accepted accounting principles. So the GAAP earnings would be like, oh, we only made $8 million because we would have made 10 million, but we had to spend 2 million to repair this factory that burned down. The non-GAAP earnings would be like, hey man, we made 10 million bucks. It was a one-off, blah, blah, blah. So if we look at these GAAP to non-GAAP reconciliations here in AMGN, it's ridiculous. I mean, I've been doing this for 30 years. I've never seen anything like this before. I'm not a biotech investor. I'm not saying maybe this is par for the course, but look at all this GAAP, cost of sales, non-GAAP. Remember, GAAP, GAAP, pretty much common sense. Non-GAAP, we can write off this, we could do that. Now let's look at their earnings here. Okay, GAAP operating income. Oh, they got the adjustments here. All right, so the GAAP income went from 1,900 to 900. That's a big sell. That's a big difference. Non-GAAP, oh, we're up. We've made money. Stuff like this happens, maybe it's a delayed reaction. I know a lot of my students have made some serious coin on this, move lower in AMGN. Like, look at this non-GAAP income. How do you go from 344 billion to a loss of 68 billion? I mean, that's big. Okay. I'm not a biotech investor. I don't really understand this stuff perfectly, but you know what? I'm a New Yorker, and as a New Yorker, we're very skeptical, but I guess you don't need to be from New York. You just need to be skeptical, and you need to always question what you see. So anyway, in reality, AMGN lost a lot of money, but because of some accounting, I don't want to say shenanigans because it's like, it's common practice, but just remember, everyone, there's the GAAP earnings, GAAP, generally accepted accounting principles. The non-GAAP earnings are when you write this up, oh, it's a one-time event, blah, 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 this, that, and the other. The bottom line is this. AMGN lost a lot of freaking money, okay? And that's why the stock has basically lost 10% in 3 days. Found some support at 300, logical level. People like nice round levels. My guess it goes lower. Bunch of our students here at Stock Market Jobber have made some serious money off of this. And hopefully you come back, and I look to see you then. Thanks, everybody.